Does a self-directed IRA file a tax return? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's video, I'm going to explain to you whether you have a self-directed IRA or a checkbook control IRA LLC, what are your tax return obligations? So let's start with the first type of self-directed IRA. Traditional self-directed IRA, where you use a self-directed IRA custodian like IRA Financial to facilitate the investment, and the investment is titled in the name of the self-directed IRA. For example, IRA Financial Trust Company for the benefit of the Adam Bergman IRA. In that case, that's known as a regular self-directed IRA. There's no tax return due, right? An IRA is tax exempt under 501. It's a tax exempt trust. So it doesn't file a 1040 individual tax return like you and me. It doesn't file an 1120 like a corporation. It doesn't file a 1065 like a partnership. It's not a taxable entity. So if you use a traditional self-directed IRA, custodian controlled or full service, however you want to classify it, there's no federal income or no state tax return. IRA Financial will file the annual 5498, which provides the IRS with the value of your IRA each year, as well as some information on the IRA's procedures for the year, whether it took distributions or whether you made contributions. If you take a distribution, we'll also submit the 1099-R. But in terms of a tax return, the only time you're going to have to file something with a regular self-directed IRA is if you trigger UBIT, the unrelated business income tax, which gets triggered in 3 instances. Use a non-recourse loan to buy real estate, margin to buy stock, or you invest in an active trader business like a bar through an LLC or partnership. Over $1,000 of income, you'd have to file a 990T, well, the IRA will, and the IRA will have to file the return. But other than that, there's no tax returns. So now let's move to the checkbook control self-directed IRA LLC. Checkbook control self-directed IRA LLC, an LLC is used as the investment vehicle, wholly owned by the IRA. You manage it, giving you the checkbook control. A single member self-directed IRA LLC is treated as a disregarded entity for tax purposes. That means there's no federal income tax return. So you're good, right? The only tax return obligations you'll have, like the self-directed IRA, is that 990T if you trigger UBIT. IRA Financial will still file the 5498 as well as the 1099-R. Now, what about if you used a checkbook control self-directed IRA LLC that has 2 or more owners, whether it's 2 IRAs or an IRA and another individual? In that case, a tax return is required because the LLC is treated as a partnership for tax purposes, and a Form 1065 must be filed. Generally, there's also a state return. There's no tax due, right? Because LLCs are flow-throughs. It does not pay entity level tax at the federal level, but a return is still due. Okay, so that's the only distinction between a self-directed IRA, self-directed IRA LLC, and a self-directed IRA LLC multi-member is the multi-member LLC that has 2 or more partners, is treated as a partnership for tax purposes, and thus needs to file a 1065 federal as well as a state tax return, whereas a single member LLC does not file a federal or state LLC return. There may be a franchise form that needs to be completed, but not an actual tax return. And then the self-directed IRA, which is not an LLC and not an entity, which files no federal tax returns, other than, in all instances, the 990T if you trigger UBIT. Otherwise, got nothing to worry about from a tax return filing. And that's one of the beauties of using an LLC to make self-directed IRA investments is there's no tax at the entity level. And unless you use a multiple member LLC treated as a partnership, there is no federal tax returns.